Good evening, ladies and gentlemen. Welcome back to Walk the Block, where we are navigating digital finance together. A very happy Easter to everyone that celebrates that. And I think the gang and I were expecting not much to happen to the crypto markets, but people decided not to go touch grass on Easter Sunday, and instead Bitcoin hit about 87.5, I want to say. So we have an interesting use case to talk about that when it comes to the charts, but that is not the focus of today's episode. Today's episode, we're going to be talking about real world assets, or the tokenization of everything, trying to fit as much stuff onto the blockchain as physically possible. We got some articles, we got some clips, and hopefully we have some good insights for you. Ladies and gentlemen, I am your host for tonight, Zenith, and I'm joined by an excellent cast of characters as always. Up first, we have Agent J. How you doing, buddy?
What's up, gang? I'm doing much better. If you couldn't tell, my voice is still a bit shot, but I am on demand. So apologies for the lack of content over the past week. But I rested up because my body was like, no, you're not working, even though your fever is gone. So I'm pretty much recovered already. I'm still a bit congested, still got a little bit of a sinus headache. But for the most part, I'm good. I streamed this morning, gave the folks a little bit of a market update. So I'm excited to just kind of get back here on a roll and back on schedule. So let's see what the rest of the week has in store for us. Because, man, we are knocking on the door of taking out that day 13 cycle high and maybe changing our base case for the 60-day cycle count. So we'll go over that a little bit later, but it's good to see everybody. Good to be back on stream. Tracker, how you doing, buddy?
Doing great, man. That was a good stream. It felt good this afternoon when we did our stream together. That was good. Just I felt like to get back right into the rhythm of everything. I've been away for all week. Jay's been down for a while. It's good to be back to see you guys and dive into this. And like you said, it seemed like it was maybe pretty quiet, but I think the more interesting thing we talked about, we've been talking about this a little bit now. Obviously, gold is everyone's been flocking to gold. Now it seems like also crypto's been holding up very well on these big major pullbacks in the overall traditional market. So are we going to decorrelate? Maybe slightly, potentially, or at least maybe get in, take the same path that gold has been going, which would be fantastic to see. So hopefully that's the trend that's going to start happening. We should probably going to have some more pullbacks, of course, but that's okay and that's expected. But if we are starting to decorrelate and it's starting to go on its own rhythm, that's going to be fantastic. So I'm looking forward to that. So yeah, I'm excited to get back into this.
Most definitely. Before we get into it, do you want to say special shout out to Centurion54X saying, what's up, guys? Good to see you, my man. Happy Monday to you. Thanks for catching the stream live. All right, gentlemen, before we get into the official topic of the day, I do have something I would be remiss. Well, two things are real quick. Would be remiss if we did not talk about. Number one, coming from good friend of ours, Nuclear Herbs, we have the official ending of the Richard Hart SEC saga. So from our good buddy Nuclear Herbs, he says, I'm happy to have called this one. Sorry I've been around much today. ML's move-in was today, and that's pretty much eaten his entire time. So give a massive congratulations to Richard Hart win. And let's take a look at our document. So from the Honorable Carol Bagley Amon, U.S. State's District Court Judge, on February 28, 2025, the court dismissed the commission's complaint, granting leave to file an amended complaint by March 20, 2025. On the 17th, the court extended the SEC's deadline to file an amended complaint until today, April 21st, 2025. Plaintiff, SEC, provides this notice that it does not intend to file an amended complaint in the matter. There you go. It is done. In the books. Dunzo.
Now, I just wanted to make everybody clear here. Zenith has been doing a lot with Nuclear Herbs for a while here, and you guys have actually been working a lot together and built a pretty good partnership on going through it. So that's pretty respectable, especially since Nuclear Herbs, like you stated, Zenith is he's already he's a lawyer, correct?
Yep, he is a retired lawyer now, so he just does some crypto legal analysis just for fun and to be part of the community and provide insight.
Which is great to see. So yeah, I mean, you guys, I know you've been really all over this one with him and diving into. You guys did a ton of work around this, and I know you were there for the Halloween, party, I guess is what you want to call it. That was there, but you guys then did a great reenactment with others on the reenacting of the court case, which everybody could actually play it out how it played off the script in the courtroom. So that was really cool to see. Now, the biggest question here now is, does this officially mean that Richard Hart beat the SEC essentially?
Absolutely. Sure does.
Now,
This
is
is
it fair to say that he's the only one so far to beat the SEC? All the other ones have been dropped, or and maybe Ripple would be in that case as well.
Ripple is definitely in that camp. Coinbase is in that camp partially. They kind of got a foot in the door. They did get a partial win over the SEC, which is still a win regardless. But what you alluded to earlier is that what we've seen a lot since the Trump administration has taken office is that the SEC has dropped a lot of investigations and dropped a lot of potential cases into other crypto companies, assets, projects, whatever you want to say. So this is different entirely. It kind of falls in the same way, which is that it's the grains of sand that have been piling up in the heap over time, and these are just big old rocks that got thrown in there too. But yeah, it's Richard Hart with Hex, Pulse Chain, PulseX, Coinbase with getting a partial win, and XRP is honestly kind of the big winner out of all of this because they were the first one to really get some big wins. They had early on, and I think total they had 3 of them over the SEC.
So RH is in a very rare club right now.
He's like the full win.
Speaks volume. Yeah, it speaks volume.
Full win. Everybody else
maybe
partial victories.
So maybe this will stop some of the freaking gatekeeping that's been going on with the RH ecosystems and stuff like that, which I'd like to see. I mean, it's at the point now where it's like, what else do you need? I mean, good Lord.
Well, one can hope. I will say the RH ecosystem has had a pretty good day, but it's also largely correlated with a lot of other stuff going on in crypto right now. Although I do believe that these charts did pump over the weekend a little bit before we actually got the official ruling today, but up 8, 10, 15% on the day. It's nothing to shake a stick at.
No, these are some of the largest movers of the day.
Oh, yeah. And our second quick hit of the evening, we have the official confirmation by the Senate and swearing in of Paul Atkins. There you go. Paul Atkins is in at the SEC. It is official. He's at the helm. So hopefully this inspires a lot of confidence. And I think we have an excellent runway that has been laid out for him so far. And I am very excited to see what he does over at the SEC, considering he's talked a lot about how digital assets, aka crypto, are a priority for him. Alrighty, gentlemen. Well, that being said, let's get after it. One more thing. We got, since you're in 54X, big thing with Richard Hart is the Finland tax case. Most of the unreported income is from PulseX, and Sacrifice, calling those sacrifices incomes. Yes. So as it stands right now, there is still one outstanding case. Notably, it is the red notice that was put out by Interpol over in Europe for Finland. Primarily, it's for tax evasion. There's an alleged simple assault kind of thing going on, which is very odd considering if you scroll down the red list and look at the people who join Richard Hart on that list, you quickly realize it's a lot of international terrorists and people that have done, how we say, very heinous things to other humans, including children. So it's very weird to see him on there for tax evasion and simple assault, aka just getting in a fight with a dude.
Yeah, it's kind of strange that they're claiming the sacrifice as an income.
We've already known that. A lot of people in the internet. Well, go ahead and finish your thought, Zena.
I'll go for it.
I was just saying that basically everybody's already known that Interpol doesn't. I mean, they do a lot of stuff that's very suspect on a lot of things, and this is could be nothing more than just a power grab, or they think is an easy grab to try to take something from somebody that's not necessarily fair. However you look at it, I just don't think it holds much water. But unfortunately, it's still a stigma. So until these stigmas get completely loose, this is the last big hurdle. If this gets cleared out of the way, which it rightfully should, I'd be curious. And that was the other thing. I know you've been all over this, Zenith, in nuclear as well as others in the community. But I mean, RH had a crazy set of lawyers, so I could only assume them now going after this to make sure this blemish or impediment gets cleared out as soon as possible. So I didn't know if there's anything coming out of RH's camp or any other information around that, or is it still pretty quiet at this point?
It's still radio silent over there. What's going on with this is it's kind of ironic that due to the win in the SEC case, as kind of obviously it's separate countries, so the law is different, but theoretically, you could kind of pose the idea that because Richard Hart won in the SEC case, that means that the sacrifice funds were not seen as a investment base to build Pulse Chain, PulseX, all that stuff. So it could be classified as income, but the issue at hand here is it's just an argument over taxes to be paid. It's not an issue with the fundamental asset itself.
Yeah, it's a money grab essentially.
That's pretty much what it is. Yeah, and it's a very prominent and outspoken individual, so they feel the need to try to, I don't know, claim a scalp if possible. But we'll have to see what resolves with that. Up until this point, we actually have very, very little on the Finland case over there, just because there's not much released. Nuclear Herbs and I are American legal analysts, if you will. We are not Finnish legal analysts. So their system is a bit different. They don't release nearly as much to the press and the public as the United States does. And until we actually get more solidified info, pretty much everything you see on the internet at this point is just a lot of hearsay. And it's the classic Ouroboros snake eating its own tail of this news source heard a rumor from this news source who heard a rumor from this news source, and they just all start citing each other with no actual like origin of the information. So it's just a lot of hearsay and just hubbub at this point.
That's a good visual. The Ouroboros.
It is. It really is.
Very good visual.
It's just fake news being recycled until people are like, it's legit, right? No, it never was, never has been, never will be, unless you get new information.
Yep.
Hey, Jay, so what's your thoughts on Paul Atkins? I know you've been all over this one, too. So, obviously it's now official. We knew it was coming, but now that it's official, I'm just curious to know your thoughts on any timelines or anything that you can see maybe manifesting sooner than later.
I don't think it'll affect timelines in terms of the major bills that we've been focusing on, like the Genius Bill and also the Bitcoin Act. In terms of Paul Atkins' confirmation as head of the SEC chair, I don't think he's going to have any major effects on those. But in terms of creating like a proper regulatory framework, in terms of how do you categorize crypto assets, do some fall into securities category? Sure. Will some fall into the commodities category and they'll defer that authority over to the CFTC? Yeah, absolutely. Are there going to be cases where they're going to have to rework the securities framework in order to fit digital assets and everything that falls within the digital asset landscape? Yeah, absolutely. In that sense, I think you're going to get more expedited regulatory framework from the SEC. But in terms of bills that are already that are going through the Senate and Congress, I don't think his confirmation is going to have any major impact on those. Now, he might be asked to testify, right? Gary Gensler has always been asked to testify whenever it came to crypto during his tenure. So if you could get Paul Atkins' endorsement in some of these hearings, then I could see him affecting those things quite positively in that aspect. But otherwise, things that stay in Congress and the Senate usually stay within the bounds of the Congress and the Senate, and then the SEC chair usually has very little to do with that. They're limited within the scope of their own practice. Well, Gary didn't really practice that too well, but
no, the whole world was his scope, and he should rule over it with an iron fist.
Yeah.
Thanks, Gary. Yeah, no, Jay, you have a really good point there, which is that with Paul Atkins, hopefully we'll see a more restrained or measured approach as opposed to Gary Gensler, who just went after anybody and everybody that he wanted to. So, like you mentioned, bills have to originate in the House, go through the Senate, and be signed by the president. Nowhere in that process is the SEC involved unless they are brought in for advisement. They do have their ability to regulate the markets through their own processes. That is part of the powers that were already granted to them. So they have a separate function that's completely separate from Congress itself. Granted, they are probably going to work together, and hopefully they do. Like, please do. But outside of that, it's hopefully going to be a different process. But I believe they will be included in a lot of the stuff, as we've seen through the executive orders back in January. The SEC was named as someone who should be taken into those advisory groups.
Yep, and then also realize. Remember when we had those discussions about SAB 121? Remember those accounting bulletins came from the office of the Securities and Exchange Commission. So in that aspect, yeah, they do effectuate a ton of crypto regulation in that regard, right? But yeah, I think it's important to make that distinction because it's not just the SEC that's involved with creating laws for crypto and digital assets as a whole.
Sir, Tracker, anything else?
Nope. I just want you covered it. Let's move on to the next one. But I just want to hear you guys' insight on those topics.
Right, we'll do. Buddy, you're coming through a little choppy, but we will keep it rolling. All right, today's big story of the evening. We have tokenization of the market from stocks to bonds to real estate is coming, says BlackRock CEO Larry Fink. If we can only solve one problem, I wonder what that problem is going to be. So from the top, here are the key points. Larry Fink, CEO of BlackRock, world's biggest money manager, by the way, wants all assets from stocks to bonds, real estate, and more to be tradable online on a blockchain. He says this concept, tokenization, would revolutionize financial ownership and investment, but one big cybersecurity challenge stands in the way: digital verification. So we are going to take it from the top. Oh gosh, I'm pushing too many buttons. All right. If the vision of Larry Fink, the world's biggest money manager, becomes reality, all assets from stocks to bonds to real estate will become tradable on a blockchain. Quote, every asset can be tokenized, Fink wrote in a recent annual letter to investors. Unlike traditional paper certificates signifying financial ownership, tokens live securely on a blockchain, enabling instant buying, selling, and transferring without paperwork or waiting, much like a digital deed, he wrote. Fink says it would be nothing short of a revolution for investing. Think 24-hour markets and a trading settlement process that can be compacted into seconds from a process that can still take days, with billions of dollars reinvested immediately back into the economy. But one big problem remains, one technological challenge, and that is the lack of coordinated digital identity verification. While technology experts say Fink's idea isn't improbable, they agree that cybersecurity challenges ahead making it work. Take a deep pause there. All right, top line headline. What do you guys think? Is everything going on the blockchain?
I'm not going to say everything's going to go on the blockchain, but you can kind of see the pieces already getting built right now. We've had an upgrade in the in somehow the way the banks are going to be working with the current systems and their banking transfer with FedNow, which came out a couple years ago. Check. Then you have now a big push. Everybody called CBDCs. Well, I don't think it's going to be CBDCs anymore. I think the target now is stablecoins. This is why you're seeing such a huge flux of stablecoins. In stablecoins, you have smart contracts. Now, is it going to be on the Ethereum network? Possibly. So smart contracts could be, or could it be an L2 or something of that nature? I don't know. I don't know what network it's going to be on. That's the next big question: is what's the infrastructure? Could they tokenize it? Let's be clear. They can tokenize anything. The one thing that I find hilarious in the article is, well, we don't know how to ensure that it's the people. Sure you do. It's their cell phone. Come on, man. You have an IMEI number, which is an International Mobile Equipment Identifier for the phone itself. That is then tied with the IMSI, which is the International Mobile Subscriber Identifier, which is on the SIM card. Those two things marrying, you have a unique ID. Then you throw in facial recognition, you throw in whatever biometrics that you're going to need to be on that chain to interface with, and then voila, you have it. The big scary thing, which the conspiracies have the problem with, conspiracy theories, is where do you stop? Digital IDs is next. That's going to be the next thing. I know the article kind of briefly talks about that's the pushback, but if you have a unique digital ID, then now you have something that's now the government feels that they could certify it by ensuring that. I guess the one big question I have, well, I'm going to pause there and get your guys' insight on what, because there's something else I want to bring up, but I'm just going to leave it at that. But so identification, totally doable. We've always said it, a digital ID, it's just nothing more than a digital ID. I'm sorry, not digital ID, a digital receipt of what you own. Right. And if it's been certified, it's on the blockchain or with smart contracts. Yes, it's all very doable with the technology we have. How do you roll that out? And what kind of pushback are you going to have? That's going to be the biggest problem. Now, I'll pause there. I'll see get your guys' insight.
For me personally, going back to Z's original question of should everything be tokenized or everything can be tokenized? I think my answer is where it's practical. I think tokenization is a good solution. So just some really basic ideas that come to mind are if you tokenize, for example, the title of your house, if you tokenize the title of your car, it removes the middleman in so many of these different transactions that usually bogs down the process as a whole. How long does it take for you to be able to sell a house to a person? You got to go through a real estate. You got to go through the federal government. You got to get the titles transferred over. Same thing with a car. It's not an easy process. And then within all of those different steps, you're paying a ton of different fees to those middlemen in terms of their fee structure, in terms of taxes, et cetera, et cetera. And so not only does it bog down the completion from start to finish, you as the buyer and also the person who's selling it incurs all of these fees in the process. If you can cut out the middleman in between and transact everything on the blockchain using smart contracts, verify everything using smart contracts, then I'm all for it. Right? Reduce the barrier to entry and reduce the red tape involved with as many things in our life as possible so that we could use that time more productively. We could use that money that would be paying towards these middlemen, towards these taxes. We could use those things much more productively. So where it's practical, yeah, I say tokenize everything. I think that's the next reasonable step. We know that over the past year or so, there's already been a lot of talks about transitioning traditional financial markets to 24/7, 365. Because they can see how much money we make over here in crypto, and they want to get in on that pie. So I think the next reasonable step is where practical, yeah, you tokenize it. Now I think you come up with the same issues, right? As in with AI. Well, how about the real estate people, right? Where else is the government going to get the tax revenue? I think they have no problem collecting taxes from people, but you're going to come up with the same questions, right? Because some of these industries, you are going to put some positions at risk, right? Inherently, because you cut out the middleman. That middleman job goes to somebody. So is there going to be friction along the way? Yeah, of course. But just like with AI, I think the inevitability is going to be tokenization of as many things as we possibly can.
Yeah, I think I'm right there with Jay. I think that this is one of the ways that you can really transform a lot of old ways of doing business to the modern era. I haven't been shy about this. I've been proposing this use case for a hot minute now, which is that this is the practical use case for NFTs or like transfer non-fungible tokens effectively. If you can turn certain things like a home title, a car registration or car title into stuff like that, it is a lot more than a monkey picture now. It is something that actually has tangibility and gives you increased utility to the thing that you already had. Again, the government will collect taxes one way or another. If anything, they've gotten very good at that over the millennia that governments have been doing such. So I don't expect that to go away, but I do think that this is the next step forward when it comes to a use case for blockchain technology.
Yeah. I mean, also imagine other industries as well, right? Look at the medical industry, right? Tokenization of those medical records. It'll make it that much easier for their patients to access their records, for their physicians to access their records. And also, if you're talking about like a significant database, right? Create a multi-sig wallet into it that makes it much less likely that those records are going to be hacked and sent out there into the ether, right? We know on several handful of occasions where that's happened, right? Companies like Apple, right? Apple, the cloud is not secure. They've been hacked multiple times, right? With information from their users being leaked. Well, blockchain technology pretty much offers a solution to that issue, right? Now,
That's
criminals
true.
are obviously going to get better over time, but I think the attack surface, when you tokenize something and you put it on the blockchain and you protect it with a multi-sig wallet, right, where the keys are held by only a handful of people to know it, I think the attack surface for that is much smaller than you just putting it in the cloud somewhere.
Agreed. We'll talk about the sensitive data here in 1 second as well.
Just to add, though, the mortgage companies are already been using some NFTs already currently to handle some of the processing and to eliminating paperwork. That's already been happening. A few companies out there who've already been experimenting with this, but at the scale they're talking about, no. So you're already going to have companies trying to get ahead of this. I know some of the car companies are messing around with NFTs as well. But yeah, anything you can get rid of redundancy and paperwork, that's just absolutely comical, especially in the medical industry. housing industry, car, anything with titles. I agree with that. But you could even take it as far. I mean, what about NFTs? I mean, they've already been experimenting with this already, and we already know this because we've been in the crypto industry, is people using it to get into clubs or to certain VIP events, your tickets to a concert. Everything's now transferable. And if you've owned it, and there's nothing saying I can send this to anybody I'd like to send it to now. You're already seeing that now with various wallets. Like, I mean, just most people know about it, about Apple wallets and things like that, how you can transfer and send different things across it. But this is not, but this is more utilizing and ensuring the security is in place so that by using this tokenization process. So we're already getting a glimpse of it, what it can be. So it's in its infant stage right now.
Dude, could you imagine how cool it is? Like, let's say you're somebody who's an avid concert attendee, and you have a favorite artist that you try to catch as many of their performances as possible. Like, imagine if you tokenized their tickets, something that would ordinarily just be a QR code in your phone or a ticket stub that you give to the bouncer at the door. What if you tokenize that? And then each and every single concert on their like 2026 world tour has a particular NFT on it, right? That's unique to that ticket stub. Like, how cool would that be? Right,
It'd be no different than a T-shirt. It'd be similar to a T-shirt or a backstage pass or something like that. Yeah,
it never fades, right?
Then it becomes collectible.
Then it becomes collectible, and it becomes a lot more memorable, right? So I could see that industry thriving if that was the case, because something that you just discard after the ticket stub and the only thing that you have is your memory of it, suddenly it's something unique that exists forever on the blockchain.
And I know that NBA did it with Hot Shots, with their digital NFT cards and things like that. That actually the digital ID card, the digital card itself, the NFT would have like a little clip or a little highlight of that player playing something, but you'd own that piece. So memorabilia is going to be huge in this. Like, they're going to definitely clamp onto that. And then you put in stuff like NFT packs. Now you get this free, entrance to, I don't know, some special event. You get it. I mean, there's so much promotional stuff you can do with this, but yeah, it's real simple. Really think about it. Where do you have receipts? What do you pay for today? Thus, it could basically be tokenized. The trick is it seamless, or does it create more of a headache? You know what I mean? Like, sometimes people over-engineer things. Like, sometimes it's easier for me just to, here's some cash, we're done, and then some other times it's better to use a credit card versus other times it might be easier to, maybe something like this that's a little more valuable. So I think you guys nailed it on the head. That's what is the practical application. But then the conspiracy people out there are going to be more worried about, because here's the thing, every time you have a technology is great. It's just, how is it being used? Because some people will go as far as, okay, cool, where are you going to stop with tokenization? You're going to start tokenizing humans? Social security numbers is going to be next? Like, where do you start? I mean, that's the concern, because nothing's telling you. I mean, once you have this thing in place, sky's the limit, what you want to do. But as far as the consumer and the infant stage, there's so many cool things you can do to this. I mean, anything you do in the marketing world, promotional, exclusive, rights to get things or buying big purchases, it can be tokenized. So the endless. I mean, it's whatever you can come up with, basically would basically come to manifest.
Alrighty, let's get into the big challenge that they're facing with this kind of stuff. So, verifying asset owners. Today, it's not easy to verify online that the person you're interacting with is that person because of the prevalence of AI deepfakes and sophisticated cybercriminals, according to Christina Hulka, Executive Director of Secure Technology Alliance, an organization focused on identity, access, and payments. As a result, having a unified verification system would be useful because there would be cryptographic validation that people are who they say they are. Quote, the financial services industry is focused on how to build a zero-trust framework for identification. You don't trust anything until it's verified. The challenge is getting everyone together about which technology to use that makes it as simple and seamless for consumers as possible. It's hard to say precisely how a broad-based digital verification system would work, but to support a fully tokenized financial structure, a system would, at minimum, need to meet stringent security requirements, particularly those tied to financial regulations like the Know Your Customer rule and anti-money laundering rules. At the same time, the system would need to be low friction and quick. There's no shortage of technical tools today, especially from the field of cryptography, that can effectively bind a digital identity to a transaction. 15 to 20 years ago, this conversation would have been a non-starter. There have been some successes with programs like this across the globe, according to Rosman. India's Aadhaar system is an example of a digital identity framework at a national scale. It enables most of the population to authenticate transactions via mobile devices, and it's integrated across both public and private services. Estonia has an EID system that allows citizens to do everything from banking to voting online. Singapore and the UAE have also implemented strong national identity programs tied to mobile infrastructure and digital services. While these systems differ in how they handle issues like privacy, they all share a key trait: centralized government leadership that drove the standardization and adoption. Interesting points in there.
Yep.
So it seems like the big question is there: how do you make it better for a customer experience, but also at the same time, how do you all agree on the standard to use?
That's the bigger problem is what standard are we going to use? Who's going to be calling the shots? What network is it going to be? Everyone's going to have the hand in the pie. And then, of course, nobody trusts the government. So there's your bigger problem. Right? Like, how do you get, because that's going to lead to adoption. If you want adoption, it's got to be a trustworthy thing where people feel comfortable using. That's going to be the biggest challenge, I think, because tokenization is nothing new, at least in in security and IT, we have tokenization all the time tied to your profile. So it allows you to access freely across whatever intranet that you're working in, or secured access of data points within a companies. Like, we are to do that today. So this is nothing new. It's just, but then how do you open that up to the public is a bigger thing. And I think you already have this. It would be basically, if you want access to do this, you'll need to be on certain infrastructures that the governments are already in cahoots with. And when I say that, not in a negative way, but they already have the network and infrastructure in place. And this is where Apple or Android, along with the major providers, cellular providers that are there, it'll be some type of pieces that have to connect using cryptography and with the tokenization on smart contracts. So they have all the pieces laid out. It's just cool. Who's going to have the best idea? And the key word in that whole thing was, seamless or streamlined, more or less. That's what's streamlined, and then what are people willing to agree to using? That's got to be the technology is already there. That's the lowest challenge, is what technology you want to use.
Yeah. I think if they're going to do this to a large scale, you're going to have to start us off piecemeal. If they can somehow figure out who's going to provide it, is it going to be the people over at Ethereum? Is it the people over at Solana? Is it the people over at Sonic? Is it the people over at Cardano? Is it the people over at Polkadot? Even if they can identify a singular entity or a handful of entities in order to tackle this project, they're going to have to do it piecemeal, because if you were to try and tokenize, if the world were to try to tokenize everything to the degree that I'm imagining it, like to the scale of the internet, that's not going to happen overnight. That might take the span of a decade at least, right?
At least.
Because not only are you going to have to figure out the technology, figure out the players in it, you're also going to have to get the buy-in from everybody else in the world to transition from a Web 2 to a Web 3 model. We've seen examples of this in kind of a microcosm. For example, let's take GameFi as an example. Remember the very first GameFi releases? A lot of them, you couldn't play on it unless you were a crypto DeFi native, because a lot of these games were on DeFi platforms. So you had to know how to navigate not only a centralized exchange, you needed to know how to get assets onto a hot wallet. You needed to log on with that hot wallet. You needed to know how to pay for transaction fees using that L1, which means you needed to know how to add the network to your wallet, right? You need to know how to connect to it. So there were so many different barriers of entry to the initial GameFi games. They realized that that's not an attractive selling point if you want to bring Web 2 users over, because the Web 2 users are used to putting a disc into a console and they're starting the game. The most we'd have to wait is maybe a few hours if it's a PlayStation 5 game that's like 60 gigabytes worth of data. That's probably the most that we would have to wait, but there wasn't that steep learning curve. As opposed to GameFi back then, there were plenty of barriers to entry. However, now, for example, a lot of new games, Pixel is one of them. I think Off the Grid is another, where you don't need a wallet. You could just play the game like that, right? You don't need to know anything about crypto. You can just play the game. I think Pudgy Penguins, there's a version of the Pudgy Penguins, right? It's the exact same thing, right? So you're gonna have to get buy-in, and they're not only are you gonna have to figure out the entities, you're gonna have to do it piecemeal. You're gonna have to get buy-in from your customers, from your old customers, and you're gonna have to go through those growing pains, like the GameFi industry did, and they're still going through those growing pains, right? And they're in their second cycle,
Oh yeah.
so it's gonna take at least a decade.
True. Jay, I think your point's really, really important there, which is that if you try to shoehorn people into using a specific way to interact with your product, aka GameFi has to shoehorn everyone into using a crypto wallet, that automatically creates a rather large barrier to entry.
Yeah, a lot of
But
friction.
Exactly. But on top of that, it's also specifying which one to use. And I think that one of the things the article talks about there at the end is saying that some of these other countries have tried systems of using online interfaces for stuff, but they were rolled out by the government and standardized by the government. For an example of this, I guess you could think about back in the early 90s, it was the US government mandated a standard for all automobiles to have an OBD2 port, which is the diagnostic port to plug into. Because up until that point, it was all the manufacturers that had their own ability to make their own proprietary ports, software, and all that stuff. Granted, they still abide by the OBD2 standard, so they have the port, but they also have their own proprietary input, especially as cars get more advanced nowadays. So the question for me on this one is, what is going to be the driver of standardization?
Yeah.
Standardization is a very important thing in the modern world because it allows you to have commonality and interface that's easy to understand, easy to get up to speed on, and easy to iterate off of. If you don't have a standard, you're going to have a lot of people running around kind of doing their own thing, but not actually interfacing with each other. The whole point of trying to go into the modern age and the internet age is that everyone is interacting with each other. If you start to segregate people into different groups and areas based on what they're using and the software that they're limited to, that's going to be a big bottleneck and is ultimately not going to allow you to get that critical mass of people to get things to really explode and grow.
Yeah, agreed 100%. And that's going to take a lot of time. I mean, for goodness sake, right? For Satoshi's sake, man, like Vitalik and the ETH Foundation can't even figure out their damn roadmap. Or Vitalik just came out the other day, like, you know what? We're going to move away from EVM. We're going to do risk VM now. So they like, Tracker made a very good point. If the world was to transition to tokenizing things to that degree, the world might go to the traditional players that already control the majority of things. You might go to the Microsofts, the Apples, the Googles, the Zuckerbergs, right? Those are the people, like the Elons. Those are the people that you might go to. If our crypto native dudes and gals don't figure their things out, right? That man, somebody's gonna take it from right under the nose. Just because you're first doesn't mean you're gonna keep the lead, right? So figure your crap out, man.
Yeah, say about MySpace. Ask him about how that went.
See how many friends Tom has these days.
Yeah, but I do wanted to bring up something here. So GameFi is really interesting because I feel like they were at the head of this, trying to figure this thing out. And there's a lot to learn from that experiment. So to me, I've never understood why GameFi
We lost you, Track.
blocked themselves into a corner.
Hey, Track, you're cutting in and out, sir. You might want to exit and come back in, my friend. Z, it looks like you got to boot him. Boot him out.
Get out of here.
Get out of here, man. Thank God that guy's gone. He was so annoying. There we go.
Try again. All right. Tell you what. Tracker, figure it out. Shoot us a message in the private chat when you're ready. Until then, though, let's keep the show rolling. I'm going to jump ahead a little bit here towards the bottom of the article. I think we have a potential answer to the question that I gave, which is that who's going to be driving the standard? Well, for tokenizing stocks and bonds and other financial assets, odds are it's going to be the SEC. So back to the article. Fink has been pushing the SEC to look at this issue. The idea is not a brand new one for Fink. At Davos earlier this year, he told CNBC that he wanted the SEC to rapidly expand the tokenization of stocks and bonds. There's BlackRock's self-interest at work and potential cost savings for the firm and many others, which Fink has spoken about. In recent years, BlackRock has been dragged into political battles and lawsuits over its voting of massive amounts of shares held in its funds on ESG issues. We'd never have to vote on a proxy vote anymore, Fink told CNBC at Davos, referring to the tax on BlackRock. Every owner would be notified of a vote, he said, adding that it would bring down the cost of ownership of stocks and bonds. It is clear from Fink's decision to give the issue prominent placement in his annual letter, even if it came in third of order of issues he covered behind both the politics of protectionism and the growing role of private markets. And what's needed to make this a reality, he contends, is a new digital identity verification system. The letter is short on details, and BlackRock declined to elaborate, but at least on the surface, the solution for Fink is clear. Quote, if we're serious about building an efficient and accessible financial system, championizing tokenization alone won't suffice. We must solve digital verification too. Blockchain continues to evolve, and people are learning to understand it better. Accordingly, there are initiatives underway to think about how the U.S. can achieve a broad-based identity verification system. There are technical ways to do it, but finding the right way that works for the country is more of a challenge since it has to be interoperable. Quote, the goal is to get to a point where there is one way to verify identity across multiple services. Eventually, there will be a tipping point for the financial services industry where it becomes a business imperative. The question is when, of course. Well, there you go. It sounds like the SEC is going to have a hand in it again. I wonder if they're really upplaying the challenge of doing digital verification, because cryptography, which is the core of cryptocurrency, it's the idea that there's different ways to securely transact or at least verify different things. You can have two-party verification. You can have multi-party verification. You have a lot of different ways of doing it too. You can have things that are numerically based, geometrically based. I know it sounds crazy, but like there are ways to do things where you each have some sort of key verification, and you do these things called zero trust proofs, where what you do is you withhold your information, but you have some sort of little like input device or some sort of output device, and the other person has the same thing. When you each give each other the ability to touch those things together, when they line up properly, they'll both go green and give you a thumbs up and be like, yep, good, verification successful, proceed with transaction, that kind of stuff. Yeah. So I think the digital verification is very possible. It's always a question of, is security going to move faster than people trying to tear it down? Because there will always be people trying to attack systems, especially the more value there is on the system. If you're talking about tokenizing everything, including digital ID, home titles, the entire stock market, that is the biggest treasure chest for a pirate, a scammer, a hacker to try to go after. Yeah. And if they can crack it, they will instantly become possibly the richest man on the face of the planet, but also have instantly
blackmail.
What it creates blackmail alternatives, but I was going to say it pretty much instantly crashes the entire market itself because everything is now unsecure.
Yeah, I mean, we have some of those already in place, right? Like the crypto native stuff, like the ZK knowledge proofs that you mentioned, the optimistic rollups. There are different forms that developers within crypto have. There are different products that developers in crypto have put out in order to make that process a lot easier. Right, Ethereum is just going to be the primary settlement layer, and then the L2 may be responsible for X, Y, and Z information, and then Ethereum is just going to be the security and the settlement layer. We have those systems in place already, but like I mentioned earlier, we see just exactly how difficult it is just scaling within a crypto native context. So you have to take into consideration, like you said, Z, tokenizing bonds, stocks, titles, documents, right? Medical documents, personal documents, et cetera, et cetera, et cetera. Imagine trying to move the entire world onto the blockchain. We're having just scaling to the degree of like the SWIFT system right now. And that's just for payments, right? That's just for payments. They're still eating our lunch. So I would say it's a great idea. I think they should keep working on it. But right now you should keep working on the foundation, right? Keep working on the foundation, identify your pain points, right? Attack one thing at a time, right? The Ethereum Foundation doesn't need to solve every single problem in crypto, right? There are other people solving for other problems. Focus on one problem at a time and then take it from there, right? Because then you master one thing and you do one thing really good. And so you don't have to solve that problem anymore.
Agreed.
I was going to tell you guys something, but did you guys notice how, I know it came out, some of the big tech companies like Google and AWS, they were saying that they're steering away from some of the technology that they've been investing in and really targeting towards crypto now. Like, so they are starting to majorly pivot. Obviously, with the clear skies with regulation, I think you're going to see a speed up in this space. Now it's going to be a race to see who can take the most share of this. We'll call it the Web3 infrastructure is probably the best way to play it. And competition causes that to speed things up. So you are going to see a speed up. I think you guys know in the head earlier, that was really, you got to have those standards so that everybody knows how to implement everything correctly. So they first need to decide, okay, what network is this going to be on? And then from there, what are those standards so then people can build to those certain protocols? So that needs to be in place, certainly. Going back to the GameFi section, I mean, I could see Facebook and I'm sorry, not Facebook, but like say PlayStation or Xbox. When you log in now, you already have a user profile. You have a library to choose from. So you would just happily have an account. You upload your money to that account. The accounts are there, and then all the games you play, whether assets you own within the infrastructure, you sell it, and then just builds up your account. And you can withdraw from that account anytime you want, essentially. So it's all due. And then of course, if you don't want to be a part of that, you don't do it. You let the user. So you let the user decide what they want to do. That's the first thing with anything. But yeah, that's all very doable that they can set that up. I think the bigger problem is why they haven't made the jump yet is are they going to lose money doing it? Because now you're giving the money over to the users, NFTs. They're gatekeeping this whole thing. So the sooner this speeds up, the sooner you're going to have these companies start to open it up. No different than everything else in history with gatekeeping, with all the other stuff that's happened before in the past. Technology will then level the playing field and people will start to, see what they can do. I mean, look at Netflix, for example. They're going up against the movie industries, creating their own content. I mean, network technology definitely brings, it's great because it brings level playing field. You have more choices as a user. It's going to open up a lot of opportunity. It's going to create new companies we haven't heard of yet that are going to spark out of this rubble, and they're going to end up being the ones that really are those big new Googles and the big tech companies you're going to see. That's going to happen. It's just that I think the bigger problem is how are they going to roll this out with everything?
The key point that I draw from what you're talking about there is incentivization, which is that you got to give people market incentives to build so they can be rewarded for it. I know we would love to have everything be tradable on the blockchain and you have true ownership of everything. But if you're like a game company or something, you want to be able to sell your game to as many people as possible. You don't want to release a limited number of games and then those things just get traded amongst other people and you have no cut in that anymore. I guess is like a more tangible example of this is for all my fellow nerds out there, it's kind of an issue that happens with collectibles or like trading card games, which is there's this magic balance where like for Magic the Gathering, Wizards of the Coast is the company that produces it. If they make a set, like a booster box of cards, but the individual cards are so good that the market has deemed them more valuable than the cost of the booster box itself, then that means that the company producing it is technically leaving money on the table because the secondhand market is going to trade at a higher rate than the base cost of the product itself. And then you can also get the inverse of it, which is that if you are making a booster box of trading cards and they're worth crap, they're worth nothing, but you still have to pay $100 for the booster box. Well, you have to either hope that the use case for that is so good that it makes up the difference that you don't care about the resellability of it. But it's a problem where you got to have the market forces and the incentives in the correct balance to make it worth your while. And then to continue the incentive talk, I think it also goes to the regulatory environment, which is where we're at right now with the SEC and the new head of the SEC, who is hopefully not going to be as litigious and just trying to go after as many people as possible. If you remove because here's what I saw over the last few years is that there's a lot of big companies that want to innovate, they want to build good products, they want to get into the crypto space, but if they push too hard too fast, they get hit with the hammer by the SEC by trying to go after them in the court of law. If you have a more clear regulatory environment, you remove the fear of that. So now you're incentivizing people to go faster and farther quickly so that we can push the technology and then build the regulation around that to help ensure that the ecosystem is healthy as opposed to just hitting whoever is in first place.
Yeah, no, I agree. So incentivization, definitely. And then, like you said, with the SEC, instead of litigating by enforcement, right, with the ban hammer, with an iron fist, you remove as many things as you can, right? Still within the bounds of a proper and fair regulatory framework, so that you you allow innovators to push and innovate at a fast clip without pigeonholing them with red tape all over the place. And I think, for crypto in general, there are a lot of companies that I believe have done it correctly. You don't have, like Tracker said, right? What's the barrier to entry? You don't have to force people to use crypto. Just have it available. You were talking about Sony and Xbox track. Well, maybe offer your customers, hey, you know what? You could enter a credit card. You could enter a Sony gift card, and use that for future purchases. Give them a crypto option. Why not? Why not? Remember way back when? Wait, I say way back when? Like a few years ago, I thought scanning a QR code, taking a picture of a QR code and taking it to a website, I'm like, oh, that's kind of silly. I don't want to do that. And then suddenly I start realizing, oh, whoa, restaurants got a QR code now to pay. That's convenient.
Very.
Got a QR code. I can scan it for the menu. When my customers pay me, scan a QR code. I don't gotta give you any of my sensitive information. Just a QR code. That's it. Link directly to my bank account. And then suddenly, slowly but surely, that technology is now, at least I'm gonna say for me personally, it's integrated into my daily life, into my own personal business. Do the same thing with crypto. You don't gotta force anybody to do it. Just keep it there so that it takes up space. It takes up space up here, right? I speak very highly of Pudgy Penguins because they're one of the few projects in crypto that they made their way into the mind share of a significant population of the entire world without talking about crypto. You know how often I see the Pudgy Penguins GIF or memes on Facebook? I see it every freaking day.
Of course, you were all over the Walmart dolls, right? The Walmart dolls with the NFTs embedded on the dolls. Yep.
These people know nothing about crypto, but guess what? They unknowingly already have exposure to it, to Pudgy Penguins. And then suddenly, when that idea starts forming and becomes a lot more crystallized in their brain, they're like, oh, you know what? That QR code on my Pudgy Penguin doll that I got from Walmart that my daughter really likes, you know what? That thing has an NFT on it. And I'm starting to get interested in this crypto thing, right? You provided them a gateway and you didn't have to force it down their throats, right? You just left it there. You left the idea there and you let it sit and you let it crystallize at their own pace. I think that's probably the best way that you could do it. Just offer them the ability to do so. PayPal now offers it. Venmo now offers it. Right? Cash App now offers it. Venmo just expanded their currencies that you could buy. Right? And now people buy crypto through Venmo.
I'll take a step further for the game.
Yeah, you didn't have to force anybody. You don't
have to force anybody, man.
Yeah,
I got a better scenario for you. If Xbox and PlayStation were to open up their own NFT tradable site, and all of a sudden users start seeing guys are now making money off the items they're collecting within the games, and there's a tradable market out there now, and then every time there's a transaction, just like a central exchange, though the Xbox or PlayStation gets a transactional cut on all transactional fees, right? That's going to be a massive revenue coming in because now you've created a market for tradable assets on your platforms that you guys have. So it's coming. I mean, it's gonna come. Are we going to be at the levels of Ready Player One? Probably not there, but they're working towards that. That whether they get to that extreme, I don't know. But it's coming. The tradable markets in that industry are coming. So, I know you got stuff you want to cover, but yeah, I just wanted to say that. I mean, that to me would be when people start seeing people making money playing games, and they're like, wait a minute, I'm already playing this game. Why would I? All right, what do I got to do now? What hoops do I got to jump through? Okay, I'm willing to jump through those hoops. Yeah. I don't know. I'm just saying.
That's true. The game talk is an excellent segue though, because I do have a clip from Thor over at Pirate Software. For those of you who don't know him, he is a game developer, used to work for Blizzard back in the World of Warcraft days, and he actually used to be a white hat hacker for the NSA. He used to be hired by the NSA to try to hack power plants in order to try to improve their security. So the clip I got here for you is kind of along the lines of when Jay does his TA, we give you the bullish case. And I think we've been very bullish on tokenization, but we need to give the bears their due as well. And I think he has a little bit of a sobering thought when it comes to trying to tokenize everything. So here we go.
The level of stupid that is happening in the games industry right now because of blockchain is insane to me. It is the stupidest shit I've ever seen. And basically what they do is blockchain in and of itself is a ledger. A ledger is a recording of transactions. not a database. It's a recording of transactions. So what ends up happening is they use this as a database for a video game. And they're like, oh yeah, we're just going to use blockchain to power these video games. That's fine, right? Well, what happens? Let's say somebody steals your account and they steal all your gold. In a normal traditional database, I can just reverse that. You get your gold back. Everything is fine. In a blockchain system, because it's a ledger, someone steals your gold, this isn't a database. They can't reverse that. There's not shit anyone can do. The admins can do nothing for you at all. I don't know why the games industry, anyone in the games industry is trying to do this, but it's reinventing the wheel as a triangle, and it's really stupid to watch.
That's a take from somebody who doesn't know much about the technology.
And it's really stupid.
I think I understand what you're saying, but at the same time, I want to give him his due on this one, which is the reason I say that is because understanding that there's trade-offs to everything, especially in blockchain is no exception. There are ways that we've done things back in the Web 2 days that are very ease of access focused. It's the idea that he's talking about here, which is that if you are using someone's product and there is an error with the product, you get hacked, you get scammed, whatever, there is an avenue to remediate that. When it comes to blockchain, everything is a lot more permanent. So you lose some of that ease of access, but you gain in a lot of other areas. So the reason I brought up this clip is because I want to show that there's always going to be trade-offs in life. There's no perfect solution to everything, in my personal opinion. And I think that this is an example of that. And it goes back to the security aspect too, which is that, do you want more secure or do you want ease of access? Because in reality, they're on opposite sides of a scale. The more secure something is, the harder it is to access. But at the same time, if something's easier for you to access, the less secure it is. This is where you get examples of websites asking you to turn on like two-factor authentication or using a randomized authenticator code. It's this trade-off that comes within this space. So I agree with you. I think that blockchain is definitely going to be the future that we're moving towards, especially when it comes to having your own wallet for a digital signature, for access to things as your identity online. But at the same time, we also got to be realistic here. And I think it's important that we let people know in the blockchain future, the ability to roll things back in case anything goes wrong, your ability to do that has decreased unless we find a new solution to that.
So I think it's an issue if we're talking about complete decentralization, right? If somebody, if I took a picture of my seed phrases, uploaded to my computer, somebody hacked my computer, right? That's gone, right? Because that's 100% completely decentralized. There's no customer support. He's talking about games here, gang, right? Like, you think Sony's going to create a decentralized database? Nah, man. They're probably going to create their own Sony, like L1. You're going to have the options for customer support. They're going to have the options to provide proof of ownership. They're going to have the options to probably roll back the chain. Fork it, one might say. Right? Not everything is going to move to a decentralized future. Right. I know the maxis hate to hear that, but we're not moving towards a completely decentralized future. We're gonna have a large degree of decentralization, certainly way more than what we have now. But do you think these powerful entities, Sony, Microsoft, Apple, Google, are gonna move towards a decentralized like ecosystem where they give up a majority of their power? Hell no. So we're talking about games? Nah, man, I don't think that's a big issue. Sony's gonna make their own L1. Like, hey, Mrs. Sony representative, my account got hacked. Okay, Mr. J, can you please provide your proof of ownership? Okay, you got proof of ownership. All right, we can roll it back. Roll it back.
There you go. I think that's perfectly a great example as well. But again, I think there's also trade-offs with it. And I'm not saying the trade-offs are bad every time necessarily. They have different degrees of effect based on what you're talking about. So when it comes to something like having a game by Sony and they have their own blockchain for the NFTs, for the items that you use in game, it is in a situation like this, centralization actually makes sense. Because if you have the singular entity that's in control, as long as you trust that entity and they have a good track record to show that they are good actors in the space, then granting that level of centralization makes sense. In the case of like a CBDC granting centralization and ultimate authority and power to like the government to control your money supply, that's where it doesn't make sense.
Yeah.
So it's cases like this where I think that right now, at least, the blend of Web 2 and Web 3 makes a lot of sense, which is that, and it also goes to the adoption model too, which is that you can have a Web 2 based game that is that is the experience the users experience. And if you want to NFTize or tokenize some of the assets that you have in your game, then you can take that step to Web3, interact at Web3, and then also be able to bring it back down to Web2. I think right now the hybrid model is, in my personal opinion, is making the most sense to me. But it is exactly, but it still is the progress towards tokenization, which is what the entire show has been about tonight.
Yeah. Yeah, man. I don't know the guy personally, so I'm gonna assume that he doesn't know a lot about the space, which is why he gave up. Like, it's not exactly a bad take. It's an incomplete take. It's an incomplete take.
I mean, it's a YouTube short, so
I would love to see what he said. What he was
definitely
talking
an
about
incomplete
reinventing
take.
the wheel. Like, what was that about reinventing the wheel? That's the thing I wanted to know where he was going down with it. It's like reinventing the wheel. Like, I didn't really hear. All I heard was it was stupid because if you lose it, it's gone. Like Jay said, it's decentralization. I understand that. But if you're in within a network, it's kind of like, I don't know if you look at it, but I know IMX, one of the largest, game studios out there, and they have their own second layer wallet internally in the game. So when you're playing the games, everything's collecting within that wallet that is strictly IMX. That is basically it's your user profile is essentially what it is. Once you do have everything, then you can then cash out to your external wallets. But everything is inside of their ecosystem, so they can always validate things before things are allowed to leave. So this is nothing more than just solutioning and solving for the problems and knowing what application to apply to what you're trying to solve for. That's all this is.
Exactly. It's solving for the problem you want to solve for. So for my defense of the man that I brought up in the video clip, I think that he's a game dev. So he thinks like a game dev, and he likes the way that the games industry is working right now, which is they have the database instead of a ledger. He likes that they have the ability to roll things back because he also knows he's a coder. Things are not going to work properly every time. There will be bugs, there will be glitches, there will be exploits. So in his mind, he's like, look, we have games. We don't, in his opinion, we don't need to blockchain put games on the blockchain from the data standpoint because it allows the developers to fix more things. I will say though, I do actually have one more clip from him. I think he does understand the crypto space. I just don't think he's a huge proponent of it because the space that he operates in is different. But this is actually an excellent security video for people about the dangers of centralized exchanges.
And the crypto community is so stupid that they keep taking their decentralized currency and putting it up on centralized exchanges and then being like, why me thefted? Why this happened? You're literally taking your decentralized thing and putting it on a central location that doesn't have FDIC insurance like a bank would, and then going, oh no, my thing's stolen from the central location that I put them on for my decentralized. What are you doing? What the hell are you doing? Stop that.
That's fair.
That is the dangers of central exchanges right there.
Yeah, man. I mean, just like with everything, there's bell curve people. Do you think bell curve people care about security, privacy? Do you think bell curve people care about the ethos of crypto? No, man. Bell curve people care about price go up. They care about being degens. They care about, Celsius gives me 7 to 9% yield. Man, I'm going to leave my money on Celsius. Wrecked.
It goes back to
you mean I can get 7 to 9% of my stables on Celsius? Get out of here. I'm going to leave it on Celsius. Wrecked. Yeah, that's what happens to bell curve people, bro. That's what happens to bell curve people.
It comes down to that. What's the layer? What is convenience more important than security? It's really that balance as always. That's once again where you're at. Now we talk about centralized exchanges, especially if you're trading, digital assets on the Ethereum network. I mean, you're going to cut out your fees dramatically. It's a great tool if you want to have a small percent of your portfolio on those central exchanges and use them. But once again, you got to be on one that it's been proven and trusted. It's withstand a lot. I wouldn't be going out to a new, you got to be hesitant on which ones you're going out to. I mean, and then even then it's still possible. I think we all know Coinbase is pretty secure. I mean, now that their regulations are coming out and they're changing the FDIC now, so that's going to remove that problem I think people are concerned about. But yeah, you should absolutely have a lot of stuff. You should absolutely have a balance of decentralized as well as centralized for, once again, what is the solution you're trying to solve for, and what is your risk exposure between how much security and convenience are you looking for? Yeah. It's a use case down to each user. But I hear what he's saying. It is pretty funny though. So if you had all this stuff, you already did all the work and put it on a decentralized location. Now you're going to move it to a centralized. So you just did all this work to expose yourself to undo everything you just did, basically, is what you did. But it's knowing why you did it. And I think, Jay, yielding, of course, is definitely very attractive, things like that. So Yeah. It's
True.
pretty funny
Oh.
how he said it, but there's a lot there to unwind than what he just kind
Bro.
of made it say.
Yeah, absolutely.
You know?
There are going to be pain points, man, when adopting new technology. The bell curve people are going to have to learn the hard lessons the same way that all of us had to learn the hard lessons when we had to learn how to navigate the internet. It comes with everything, man. Like nothing new, like nothing that's ever worth having came without the pain points, right? That doesn't leave scars. It's going to have to leave. And guess what? During this transition, a lot of people are going to get wrecked. A lot of people are going to get scammed. Right?
A lot of people lost a lot
We're here
of
to
money.
prevent that as much as possible, right? But it's gonna happen. So it's like, yo, I understand the take, man. I understand. It makes sense. But it's like you got to look at it from a broader context. Doesn't matter if it was crypto, doesn't matter. Insert X technology, insert AI. Right? You don't think people are gonna use that inappropriately and get wrecked using it? Of course they will. Of course they will. AI, have my AI write my essay. Okay, just got hit with a plagiarism thing from Professor X at university.
Oh yeah, no, the AI stuff is wild too. I was listening to a podcast recently, and a lawyer was on there. He's like, "Yeah, lawyers are using AI, and the AI is just making up its own cases, and they submit their case before a judge, and the judge is like, this seems weird. Cool, come in tomorrow. I need you to show me all the different cases that you have cited in your arguments now, and if they don't exist, I'm going to disbar you for lying to the court."
But so just to get everybody some context here. So what we're talking about, everything is living right now. You're in Web 2. The blockchain is going to be Web 3. Web 4 is going to be AI and quantum computing. That's where you're moving into Web 4 area, which they're already calling it Web 4. So that's the scary stuff because, yeah, you want to talk about a disruptor. It's huge. But yeah, going back into it, yeah, you're going to have a learning curve. Just like Jay said, when we went into the internet, how many companies went belly up because they were trying to rush out there? People were throwing so much money at everybody in the late 90s at these companies where they were just sitting around not doing anything. It was crazy.
The website.
It was nuts. The .com was a huge failure when it came to that, but they knew it was going to be selling. They just didn't know how to apply they didn't know what application to put it towards. They knew the technology was great, but how do I apply this to real world problems? They didn't know. And that's kind of where you're at now. Like we have been involved in this. We see the tokenization and where all this is going, and sky's the limit, right? There is no limitation how far this thing could go, whether it's good or bad. And that's true. Think, it's just now getting to these hurdles that you're going to have to get through on those growing adoptions. Yeah, those growing pains, basically.
Gentlemen, final question of the evening. Give us a quick timeline of maybe dates and milestones that you foresee for tokenization of assets. So I'll start it off. How about this? I think that within 5 years, I could see a portion of home titles becoming tokenized. And within, I don't know, I'm tempted to either go 2 years or 10 years for tokenized stocks. What do you guys think?
I think within 2.5 years, me personally. Technology moves so quickly. And so because we don't have an oppressive regulatory landscape here in the West anymore, people are gonna build and break things like that. They're gonna build, they're gonna break, they're gonna build, they're gonna break, they're gonna take action. So you've just now expedited that process because now innovators can innovate, entrepreneurs can start businesses, right? Companies can start moving back here, and that process is just going to be expedited. Technology moves too fast, man. So I think, yeah, within 2.5 years, within the next 4-year cycle for sure.
Right.
Track, what you got?
The scary thing about it, and fortunately, I mean, I am a technical person. I am a developer. I'm a network guy. I have empathy. I have a conscience. So I would never be a black hat hacker. But I personally could not sleep well at stealing things from people. Now, the people who don't have that problem, that have the technology, it's not even going to be a challenge for these people now at this point with this technology coming out. There's going to be people getting scammed left and right. I was already thinking about it. Like there's going to be basically AI and certain technologies will be able to go in there, probably hack people's phones, mimic the voice of a loved one and then turn around and call that person and say, hey, listen, so I need such as, because I don't, and be totally valid. And that's how scams are going to start coming out. They're going to get so sophisticated, you're not even going to know. That's the scary part about it. So, and unfortunately, governments and regulation, they're so far behind. The hackers are always so far ahead advanced. So going back to tokenization on the timeline, I mean, we're already tokenizing. We're already kind of there. There are some mortgage companies already doing that. There are car companies already looking at this. The music industry has already started tokenizing. You know, I know what was it that Rihanna was putting out her music? It was tokenized for the Super Bowl, and certain people own certain. Actually, during a song, certain people won randomly tokenized. They owned a percentage of that song's assets going forward. So the music industry has already started doing some of this. I know in the some artists out there are looking at tokenization with their music, especially the freelancers that are out there, and they can sell copies of their music out there by tokenizing it. So that's already happening. But at the larger scale, like something like large mortgage company or something like that, yeah, I'd say maybe a few years tops. You're going to already see some major disruptors coming out. On the conspiracy side of everything, I like to come back to it because I'm sorry, I have to think like, I'm not a sinister person, but unfortunately I have to think like the sinister people out there who are going to be doing this, who's first to the game, that are going to be run as fast as they can. And let me tell you, security is going to be the last thing that they worry about. No different than your smart devices that everybody wants to sell you, like your freaking, I don't know why refrigerators have to have a TV monitor on it, or a washing machine that needs Wi-Fi connection to tell you when your laundry is low. I have no idea why all this crap is being hooked up. But you think those companies spend a lot of money in R&D on security for those devices? Yeah. Hell no. That's why they're easy entry points into your home network systems. So they don't even look at that. So I think you're going to see such a fast pace. You're going to see two things: companies moving very quickly, very fast down this route because they want to be the first to entry, or the first to market, and to try to grab that much capture. But then you're going to, same time, you're going to have massive, hackers running right in parallel with them, trying to get as much as they can. And then the poor consumer is going to be in the middle, that the first ones getting out there are going to get wrecked. A lot of them are going to get wrecked out the gate because you're going to be basically no different than a guinea pig, or you're going to be a beta tester for these new protocols. So be careful on what you're getting involved in. The technology and the companies getting out there are going to be great, and things are going to have opportunities for people to capitalize on these. But be very careful on using them until they're truly tested and worked out the kinks. No different than an update on your smartphone and stuff like that. Let everybody else be a beta tester on those updates before you decide to get the update, basically, is what I'm going down the rabbit hole. Security is something that you've got to be in the back of your mind thinking. And in anything you think nowadays, unfortunately, it's going to lead to a paranoid society, because you're going to have a lot of people getting hacked. Now, I'm not trying to be, there's going to be a lot of great things that come out of this. I'm just thinking that this is another option. But timelines, yeah, I'd say a couple years. You're going to see massive. I think you're going to see the music industry move quick. I think you're going to see the mortgage companies move quick. I think you're going to see car companies move quick. The games are going to happen very quick. I think they probably already have stuff already in the works. We just don't know about it yet. So yeah, I think there's a lot of stuff that's going to happen very quickly.
I like it. I personally would bet money that GTA 6 is going to have some sort of tokenization in it. So whenever that gets released in the next 2 decades.
Yeah, that's the one. That's the one where they say if that's got, then you're off to the races. But I think, yeah, you're going to see more stuff coming out there. I could see Web3 games starting to partner up with mainstream sites. I mean, even some of these games that Jay routed off, they have those games on the various platforms. They have them on PlayStation, Xbox, mobile. They already have these games out there, but you can consider those the beta testers that are the minesweepers of all the problems trying to figure these things out right now. And the big companies that are sitting on the sidelines, and the big, the PlayStations and Xbox, they're sitting back just studying it. They're just studying the metadata as far as what they're figuring out. To figure, okay, they're letting these guys have to pay the price, and they're going to capitalize probably on it. So, yeah, but it's exciting. It's going to be an exciting time. It's just something you got to be. People need to be really careful about all this stuff too.
Definitely. Can't say we don't live in exciting times. That's for sure.
Agreed.
No, far from it.
Alrighty, gentlemen, let's go ahead and close it out. Sorry for the folks out there that were hoping for some charts. Ran out of time today. If you want that, you're going to have to check out Jay and Dace in the morning on their Market Open stream, where they cover all that stuff and more. So speaking of which, Mr. Jay, where can the folks find you?
You can find me on Instagram at, what is it? Agent_J Schroth, on X at _P90Hex. If you did want to catch the stream earlier, you could go on our Telegram and then go into the Telegram exclusive content folder. And you could see the morning update. TLDR is we have a directional bias. It's still heading up. And right now, as I look at my charts, Bitcoin, it just took the local high and it's pushing towards taking out the current cycle high at $88,804. So if that is taken overnight as we sleep, then we are going to go over the primary scenario on tomorrow's morning stream. Aside from that, thank you guys as always for joining us here on this wonderful Monday evening. We know that time is your most valuable asset, and we do appreciate that you spend some of that time here with us. So until next time, track. Oh, there it is. There you go.
No,
It just
no,
happened.
no. I mean, no, I plan on being there too. I mean, I'm enjoying those
It
mornings.
just happened. We just took the prior cycle high. So
Very nice,
okay,
very
so
nice.
beforehand, Z, I just want to get your quick thoughts on this, man, because it just happened live, bro. It just happened live. So what do you think about this now? Because this is now our primary count. We just took the cycle high. So what do you think about it?
I'm gonna have to look at it more in depth, but there's a reasonable case that we just had an 84-day cycle with a day 7 high.
Can you bring up my screen real quick, Z?
Sure.
So there you go. So this now becomes your primary count. We got a day 15 high. Day 15. And then this now moves over from a left translated 57 to a left translated 84. First time, Z?
It might be. I'm not gonna lie. I think that is so improbable. I'm gonna have to run my numbers and figure it out.
Yeah.
What's less probable, an 84-day left translated cycle or just another failed cycle?
Yeah,
like,
that's what I was
gosh.
thinking. I went over that this morning. If you don't want to make this your primary count, you're gonna have to consider this a failed cycle, right? Where you took out the cycle low and you make a higher low at the end of your 60-day cycle instead of making a lower low.
Wild
Right.
stuff, man.
Yeah. So it happened live, so I wanted to share it. I told
Yeah.
everybody this morning. I was like, if we take out the cycle high, this is gonna be my primary count now. So there you go. It's my primary count now.
True. All right, Tracker, get us out of here before we dive into the charts too much further.
Nah, just appreciate it. And as always, we'll be streaming on Mondays. We got some other things cooking up. I know we keep saying that, but we do have some serious stuff cooking up that we're starting to lay out and get in place. Things are starting to fall in place for us. So we'll talk more about that hopefully next week. And then we'll be streaming. I'll be there with Jay and Dace in the mornings because that's always a fun time. That's a really good time actually. We've showing a lot of turnout there at that time when people are really following the technical charts, and that's a nice sweet spot for the action on the day too. It's really a lot of fun. So looking forward to that. That's pretty much it. Appreciate everybody spending time with us tonight.
Yeah, really appreciate everybody out there. By the way, we did have a few more comments rolling in. Our buddy Iron Hands Investing coming in with a rocket ships because we were blasting off tonight. And then as always, Centurion 54X, he says, NFTI, tokenize your house. Click on a phishing email. Gone. It's an evil world out there, folks. Oh. Other than that, though, folks, thank you so much for joining us here tonight. This has been an absolute blast of a stream. Had a lot of fun talking about the tokenization future coming in, and I'd be remiss if I didn't bring up Thor from Pirate Software. I like him. I think he's a fantastic game dev. I think he's very bearish on crypto overall, but I think it's important to balance out the views. But overall, I think this is an excellent show. Thank you guys so much for showing up. You can follow me on Instagram and Twitter at ZenithDI, and you can follow the show at Walk the Block NDF on Twitter and Instagram as well. Catch the Jay and Days morning show. I unfortunately will miss it because I'm doing a waste management coordination training for 5 hours in the morning, so I will not be there. But these guys will be there talking about all the stuff going on in the markets and everything else going on. Until we catch you guys next time, I hope that everyone out there has a fantastic evening. Stay safe, and we'll continue to navigate these digital markets together. Good night, folks.